Hello and welcome to the March 2019 quarterly update for the interest income portfolio. Interesting sort of movements that we saw in this portfolio, really strong to the upside as capital gains really took off. And it is around the concern around global growth, and why bond markets saw such an inflow is that clearly there is risk growing in markets, and that really did translate through. In fact, we actually saw inversions in several international bond markets that really did move that through. Looking at the performance in the March quarter, 2.75%. It's a very, very strong performance for what is a very conservative portfolio, which itself shows you that there is risk off. Having a look inside, it is mainly sort of towards the Australian sort of bond market side, and really want to highlight the Aussie 10-year in the quarter hit its lowest yield on record at 1.731%. It finished down 54 basis points. So it started mid 2.5%, and that's a really big movement lower. And that shows you clearly that almost to some point, buying into this market, particularly the bond market, maybe you've got slightly irrational as safety was bought at any price. Looking forward, and what's likely to drive this portfolio forward further was actually something coming from the RBA in the quarter, and it's likely to filter throughout 2019. And I really want to highlight this quote from Philip Lowe, and that was the end of his statement that he had to an update up in Sydney. And there was a plausible scenario under which the next move in interest rates is up. There are also plausible scenarios in which it is down. At the moment, probabilities appear reasonably evenly balanced, and that really did highlight why the bond market really moved so strongly on that number. It's actually now got to a point where the market believes come December 2019, the Australian official cash rate could be as low as 1%, according to 65% of economists, and pretty much the same amount on the market side. That is clearly a capital gain for this portfolio. It will likely continue to probably perform much, much stronger on a capital basis than we normally see it. So be aware this portfolio is showing risk to the upside for it, and certainly something we expect to continue on a capital basis for the foreseeable future.